Hello and welcome back, guys. Do you hear me? So hopefully you can hear me. Sound is there. Great. Thank you very much for your reply, guys. Okay, so this might be unexpected weekly market outlook. The reason is that we are having, some big events this week, so that might set the tone for the next years, for the 2023. All right. So and I thought that it's going to be important to share my views with you guys so that you can understand what we may see in the market for after the Fed rate decision and at the start of the next year. So um, this week, central banks rate decisions can set the tone for the rest of the next year. All right. So hopefully that gonna help you to trade for the rest of the year, guys. So we are live on YouTube and live on Trading View as well. All right, so I think I should start. So let's just start. All right, so today we are going to have a very important data is going to announce at 1:30. It's a CPI numbers. Okay, so very important data. So this is the data which can set the tone of the market. All right. So CPI currently is the forecast is the 7.3%. All right. So the previous one was the 7.7%. Okay. So after having these numbers last month on 10th of November, so we got a big move. All right. We have seen a big move in the market after having those CPI numbers. All right. So uh, to be honest, I'm not expecting a big move in the market after having CPI numbers. All right. So we may see a volatility, a sideways market volatility today on CPI numbers, because big investors are not going to jump into the market today ahead of the Fed rate decision tomorrow. All right. So they're gonna wait for the Fed decisions to Fed to decide, all right, and a couple of other central banks to decide, and then we may see a huge aggressive movement into the market. All right. So last month, why we have seen big movements last month? Because the report was unexpected. Market was not expecting quick sharp drop in the inflation. All right. And we don't have a big events which can pass on that volatility. So if I'm gonna look at this, all right, so the last month numbers, all right, so the last month numbers dropped up to 4 and 0.4, all right, and that drive, okay, that drive. So if I'm gonna look at this, okay, so we let's just look at the inflation chart rather than looking at that. Okay, so from inflation chart you're gonna get the idea that what's happening, guys. So inflation is just simply topping out. So that's very important. So top in inflation gonna set the tone for the rest of the 2023. Okay, so where the assets gonna go in 2023. All right. So I'm expecting inflation to again drop today. There we got the inflation chart. All right. So this is very, very important, chart, guys. So if you understand that, you understand the rest of the market, where the other assets going to go. Because there we can see on this chart, if I'm gonna look at that and that area, that place, so there we can see that in 1975, okay, so inflation, after having a quick rise from the Fed fund rates, all right, so inflation found its top over there and started to fall very, very aggressively, all right. But what happened again? Inflation went up so aggressively because Fed started to cut too early, all right. They started to cut rates too early. That has driven the inflation to rise back to the upside. That's the main reason this time, whenever you hear an official from the Fed, everyone is just saying that they know no gonna cut the rates too early. They know no gonna cut rates too early. They're only gonna hold rates, all right? Everyone is just saying that they're gonna hold rates. If markets start to price in for rate cuts, they're not gonna cut. They're gonna hold rates far higher so that inflation can come down. All right, they don't want to repeat that mistake. So if I'm gonna pull out some, you know, some charts, all right, so let me find the chart, if I do have that chart somewhere else to explain to you quickly. So this is very important. So this stuff might be boring for you, okay? You may think that this guy is talking about this and that, blah blah blah. It's not making sense, but this is very important stuff. If you're gonna understand that, you're gonna understand the assets, where the assets gonna move. Okay, there we got the chart. Okay, so there we can see. So that's the 1974. Okay, so what was happening over there? Rates were rising so aggressively. Fed fund rates were rising so aggressively, and yields were rising. Okay, and then inflation started to fall very, very aggressively to the downside. Okay, inflation started to fall, and market started to price in for rate cuts. Okay, market started to price in for rate cuts. All right, and Fed also, you know, started to cut rates. Okay, Fed went after the market. All right, they cut the rates. Okay, but what happened? Inflation again started to spike up in 77, all right? Inflation started to spike up aggressively. So they didn't hold the rates over there for the inflation to stay close to 2, all right? At that time, they were not having 2% target on inflation, all right? But again, we have seen a second shock of the inflation, all right? So that's what they are. They're saying that they're not gonna do that. Okay, they're not gonna cut the rates. Even if market is going to price in for rate cuts in 2023, they're gonna resist. Okay, they're gonna hold and they're gonna resist. They're not gonna cut the rates. So if I'm gonna pull out another chart, okay, so we are right now there. Okay, this is the second chart. Right now we are there. We are having inversion on short end. Okay, so short end yield curve inverted, and Fed is raising the rates aggressively. Tomorrow going to be at 450. Inflation started to fall. All right, so longer end 10-year yield is also started to fall. All right, so what they are saying that they will let the inflation to fall. Okay, but they're not gonna cut the rates. The previous chart which I have just shown you, okay, on the previous chart, Fed started to cut, and then again we have seen a second shock in the inflation. They're saying that they're not gonna cut. Okay, they're gonna hold rates over there. They will let the inflation to fall below 2%, and then they will start cutting the rates. That's what they're saying. They're saying that they're gonna resist. Okay, so we'll see how Fed is going to downplay rate cuts. Market is already started to price in for rate cuts. So market is peaking at 450 or 5% interest rates. All right. And these two charts are very important. So hopefully you got the idea what's happening, all right? Hopefully you got the idea what's happening. And that's the past. That's the past, 1974 and 1980. That's why many people are saying that we are having similar kind of scenario like we have seen in 1980. I don't think so we are having 1980 kind of scenario. I think that we are having 1974 kind of, you know, inflation, all right? So the 1980 inflation came because of the Fed policy mistake, all right? They cut too early and then again inflation spiked up. So we are not there yet. So I believe that we are in the first phase of the inflation. Yeah, so if Fed is going to cut and going to follow the market, okay, then we may see another shock, all right, another shock in the inflation. So we are not there yet. So this is the first shock, you know. Okay, so inflation is finding top over there at 9%, okay, and dropping. So what that mean is why inflation, is setting up to go lower. Okay, so and what assets can be affected when inflation will go down? So the inflationary assets, they are already set to drop, like oil and many other commodities. If you guys remember my previous video, previous weekly market outlook, yeah, so I was talking about that all commodities will drop, like let me pull out a couple of, all right. So if I'm gonna look at the oil, all right, so we do have oil there. So oil is dropping from that top, all right. So oil is dropping from that top. So we were expecting oil to drop. So if I'm gonna, pull out a couple of more charts, all right. So commodities index. So I do have posted a commodity index chart over there. So which includes, commodities, many inflationary commodities. Okay, so if I'm gonna try to find out that commodity chart, that's the oil. So that was very much similar like that, the commodity chart. Okay, so oil is falling. So that's the reason. Oil is gone well below, at this, well, I mean 70. Okay, but inflation is somewhere there right now at that top, where the oil close to 100 or 112, we can say that. So I'm looking for a commodity chart, commodity index. So that commodity index is falling significantly, right? And this is the commodity index. Okay, so crash is coming. So there we can see that the price has significantly dropped from 840 to 590, we can say that. Okay, and inflation is still falling, all right. So inflation is still started to fall. So some assets, they have already in the bearish cycle, we can say that, like copper is going down, oil going down, and if I'm gonna look at the other commodities, all right. So lumber, all right. So there we can see that the lumber is crashed, all right. So lumber is also crashed, and corn are also setting up for a drop. All right, so struggling. We have seen a sharp sell-off. Okay, so cotton already dropping. All right, so we have already seen those sharp sell-off over there. These are the soybean also going lower. All right, so greens index is also setting up for drop. So these are the commodities which are some of them already falling very, very aggressively, all right, and some of them have already dropped. Okay, so copper is also one of them. Copper was also going lower from that top. So these commodities still gonna go more lower. Okay, some of them are still close to top. Some of them have dropped more than 50% of their previous bullish wave, and that caused the dollar to go higher. Okay, these commodities, now these commodities are dropping, dollar was going higher. Okay, so the wave which we have seen on the dollar. Okay, so if I'm gonna look at the DXY chart, hopefully that gonna help. So that's too old, all right. So maybe actually the trading view has removed the tags, all right? So it's a bit difficult to find a chart now. Right, so we do have that chart. So when we were expecting dollar to go higher from there, right? So hopefully you guys remember that. Okay, this 2-week chart. So this wave, the bullish wave, which is causing the commodities to go down, and eventually inflation is finding its top over there at 9%, all right? And inflation started to fall. All right, so now you got the idea that why inflation is very important, why inflation figures, inflation numbers are so important. And if you understand inflation, you understand the rest of the market. Okay, so inflation, what was the first casualty of the inflation? Higher inflation was the Bitcoin. All right, so Bitcoin started to fall from 60,000. Okay, so it started to fall from 60,000 and this top, okay, and went lower very, very aggressively. Now, Bitcoin is simply sending a very strong signal that we are going to see deflation in the market in next couple of years. All right, we are going to see deflation. We are already in that process. Okay, so inflation is going to drop. Hopefully now it is making some sense for you guys that why inflation numbers are very, very important. Okay, so inflation is finding top over there. This chart, okay, so inflation is finding its top over there. So what we are expecting inflation to do, inflation to continue to keep pushing lower, as we can see that the Fed fund rate tomorrow going to be somewhere close to 450, right? And there is a policy lag which gonna play and gonna bring down inflation, and the assets which are still staying close to the top, they're still gonna continue to keep dragging lower. Specifically the commodities, they're gonna continue to keep falling. All right, so hopefully that makes sense what kind of setups we may see in the market. All right, now let's look at the charts. All right, let's look at the charts and setups for the rest of the week. So before going to look at the setups, if anyone want to join us, just simply go to the Wave Dash Trader, and if looking to get more information, just simply fill that form and send that form to me for further information. I'll try my best to get back to you as soon as possible, guys. All right, now so hopefully you got the idea that what you are looking. Okay, so I'm expecting inflation to fall below 7 today. If it falls below 7 today, let's say 6.90 or 6.8 or 7, this is going to be surprise for the market. These numbers going to be surprise, going to be a big drop. Okay, almost a 1% drop, right? In the previous, the last month numbers were sitting at 7.7. So if we see 6.7, this is huge. Okay, this is less likely. I'm telling you that the 1% drop is less likely but possible. All right. So if we are going to see numbers 6.7, then this is going to be a big drop, 1% drop in the inflation, huge drop, right? And if we are not going to see, numbers below 7 and going to see exactly as being expected, 7.3%, still gonna be okay, but we need numbers below 7.3 or below 7.3 or exactly 7.3, all right? So fall below 7 gonna be a surprise for the market, all right? And we may not see movements in the market, after having a surprise in the inflation numbers, but we may see movements after the rate decisions. Okay, so how many banks are going to have a rate decision? So first one going to be the Fed, all right? So it is already priced in. Okay, we know that what Fed going to do tomorrow. So they're going to raise the interest rate with 50 basis points. So it's already priced in. All right, so market is not buying the dollar ahead of that. What market is doing right now, people are buying the assets or buying the risk on assets. They're buying the equities, all right, for short term. And if Fed is going to be dovish tomorrow, all right, which is more likely that they're going to be dovish, then we may see more upside on the equities, okay, before the end of this year. And if Fed is going to be, let's say, after today inflation data going to show concerns tomorrow, that they're still not happy with the inflation data, all right, then we may see, you know, some volatility in the risk on assets, and they can drive the next leg lower. I mean, Fed can, you know, throw cold water on the risk rally which we are having on the risk on assets from the floor, from the bottom. All right. So Fed is going to come, and then the Swiss National Bank already priced in 50 basis point hike gonna be over there. All right, and then the Bank of England, all right, so 50 basis points. So there is possibility that they're gonna raise the interest rate with 75 basis point. All right. So all these banks are raising the rates in slowing economy. All right. So economy is slowing down. So growth is slowing down significantly. They are raising interest rate in recessionary environment. Okay, and then they're going to be the ECB already priced in. So we may see, you know, some strength on the euro, you know, after having the hikes from the ECB. All right, and then we're going to have, you know, some you know, PMI numbers on Friday. So we can see that the week is fully packed, and that can set the tone of the market, where the market is going to go. Now let's move on to the setups. Okay, so what we can expect. So first of all, I'm going to look at the dollar. All right, so as said, we are expecting dollar to just keep falling. So if I'm going to go to the dollar chart, this is the dollar chart. All right, so we are expecting dollar to fall for longer term. All right, why we are expecting dollar to fall for longer term while the inflation, you know, is also dropping. All right, so the reason for the dollar to drop is just simply coming from the Fed side. All right, so Fed has already raised the interest rate. Now they are looking to slow down the hiking cycle, are going to completely pause the hiking cycle. All right, once they're gonna, you know, already they're gonna slow down tomorrow, and once they're gonna pause, this is gonna be a dovish, you know, signal for the dollar. So dollar is already feeling, you know, Fed pivot, right, and found its top over there at 114, and in a bearish trend. Okay, so it found its top over there, and falling from there. Okay, so it's found its top over there at 113, and falling from there. All right, so reason to show you these charts so that you can understand that what is the next move. Okay, what we can expect from the all right, from the market. Okay, so we are having bearish wave already on its way. So that's the updated chart. All right, so if I'm gonna look at the DXY, so I'm expecting dollar index to continue its bearish trend. All right, so I'm expecting it to continue its bearish trend. So if I'm gonna pull out the euro dollar chart, all right, so there is a possibility that the euro can continue to keep rising. All right, so there is a possibility that the euro, let me pull out a clean chart over there so that you can get the idea that what to expect. All right, so we have already seen a strong risk on rally on some risk on currencies. Okay, so if I'm gonna look at this chart so that you guys can get the idea that up to which level we can see strength on the euro against the dollar. Okay, so we were having a strong bearish rally on all right, so on Kiwi CAD. Okay, so we were in a strong bearish rally. That bearish rally started on the euro dollar all the way from there to there, 95. Okay, and similarly we have seen a stronger sell-off on the risk on currency, which is the New Zealand dollar against the CAD. Okay, so almost started similar, similar date we can see, and the Kiwi found bottom against the CAD at 76. So what has caused that move? All right, why we have seen that so aggressive sell off on the euro and at the same time on the New Zealand dollar? So CAD was being lifted up by the higher oil prices. Okay, when oil was rising, CAD was being lifted, CAD was being bought by that, okay, which was causing that the New Zealand dollar to continue to keep dragging lower. And what was causing the euro to continue to keep dragging lower? Again, similar story. Okay, so Europe was fighting with the energy, okay, and diverting their energy supply from Russia to other countries, right? So they stopped buying oil from Russia. So that was causing the euro to go down and New Zealand dollar to go down. So why we are having a strong aggressive rally on the New Zealand dollar? Why New Zealand dollar is rising so aggressively against the CAD? And why euro started to continue to keep pushing more higher? Again, the same story. So Europe got enough energy security and got enough gas and oil for this winter, and also where the oil prices are going right now, so sitting at $70. Okay, so oil prices started to fall from, all right, so oil prices started to fall from that top, right? So if I'm going to pull out the oil chart, okay, so there you got. So oil started to fall from that top and sitting at the 70. Okay, and there is a very good chance that oil, gonna test 60 in coming days. All right, so gonna test that $16 mark. So oil prices were going down, and what was happening over there? What? All right, so euro started to rise. Okay, so Kiwi significantly went higher. So right now we can see that the New Zealand dollar against the CAD is testing this date. All right, so the date which we are having over there is the 7th March. Okay, so price is being tested. The Kiwi is testing the 7th March, and there is a potential for the euro to continue to keep rising for more upside all the way up to 7th March or 7th March high. Okay, so we still got a room to run. There is possibility that the euro still can continue to keep pushing more higher. So hopefully you got my point. Up to which level we can see that the dollar index to continue to keep falling. All right, so 7th March low can be tested by the dollar index. Hope that makes sense. All right, so the lower the oil goes, okay, the lower the gas and natural gas prices and the oil prices goes, gonna be good sign for the euro. All right, and also gonna be good sign for the other risk on currencies. Commodities currencies are already struggling, and they can continue to keep struggling. All right, and a couple of other reasons, why CAD is falling so aggressively, because the Bank of Canada stopped their hiking cycle. Right, they are not raising. They said that they're gonna slow down or completely gonna pause their further hiking. They're not gonna raise the interest rate anymore. Okay, so that's us, almost end to a hiking cycle, right? At 425, I think, or 450. So that's also causing the CAD to go down. Oil prices and hiking cycles, all these are strong, dovish for the CAD. Okay, so what is coming after that is the ECB. All right, so ECB is still saying that the inflation is so much high, and we are still looking to bring down the inflation. We're gonna keep raising the interest rates. All right, so this week they're gonna raise the interest rate with 50 basis point, and 250, and still they can say that they're still gonna raise because the inflation is above 10%, right? And 10% inflation and 250 interest rate. All right, so huge gap is over there. So we may see more hikes from the ECB, even in the slower, slowing down economy, right? And that can drive the euro to continue to keep pushing more higher. Okay, so we still got a room, and there is a good chance that the euro can continue to keep rising all the way up to 112, right? 113, or in best case scenario up to 115. Okay, now let's get back to the dollar index chart, up to which level that dollar index chart can go. All right, so if I'm gonna, hopefully you got the idea now, guys, up to which level the dollar index chart can go now. If I'm gonna pull out, and 61% retracement. All right, so 61% retracement is just there. So 99 or if I'm gonna look at the 7th March low. Right, so up to this low, we can see that the dollar can fall. All right, dollar can fall up to this low, and in longer term, we'll see how that develops. So you got the idea that what we can expect, on the dollar to do after the ECB rate decision, dollar to continue to keep falling. All right, dollar to continue to keep falling after the ECB, after the central bank's rate decision. All right, so if I'm gonna look at the current 4-hour time frame, so we are simply looking price to stay below that trend, okay, this 4-hour time frame trend, okay, and break down and continue to keep falling very, very aggressively lower. All right, so break down sharply and continue to keep dragging lower, and continue to keep falling all the way up to 98. All right, so if we don't see breakout, then simply slightly get a bigger one. Okay, so this bigger correction, and then again keep the trend intact for the downside. So no major change right now we're expecting on the dollar index right now. Okay, so hopefully you got the idea what to expect from the euro to continue to keep rising. Okay, all the way the target is the 11. th March, all right, so this place you're expecting euro to continue to keep rising. All right, so the reversal has already happened, guys. Okay, so if I'm gonna look at the old chart, so the reversal has already happened for longer term. All right, so what you are looking right now, you are looking continuation moves. All right, so this is the old chart. That's the old chart. We were expecting one more leg lower and then test the low and then reverse the trend. All right, so we got the short-term continuation to the downside. Okay, and then we found out aggressive floor over the 97.50. All right, and then price started to rise over there after hitting the 1970.50. So we are into that trend right now. Okay, so price is just reversing, so pushing higher. So we are within that trend. And right now, market is struggling at the top, at the 105 area. Right? So these moves are already on its way. Okay, so we were expecting that flat formation to form and continue. So price is just trying to stay above the trend, okay? So we are already into that trend, and we are expecting it to continue to keep pushing more higher. So on this time frame, okay, so we are having rate decision. So we are expecting Fed to be dovish and slow its hiking cycle the way Bank of Canada has already done that. All right, and that's going to be a dollar bearish. All right, and we are simply looking this to continue to keep rising. All right, so we can see over there market is not moving anywhere. Okay, market is not moving anywhere. It's just staying sideways over there. So the reason is very much simple. We are having some big news events. All right, so that's causing the market to stay into the correction. Okay, so we are looking this to break out and continue to keep pushing more higher. So in case if we don't see that breakout, okay, price is not breaking out tomorrow and going to push lower, all right, and going to give us a bigger correction, okay, that can extend up to within these areas, all right. So still that's not going, the buy opportunity or the trend is not going to change, all right. So we're still going to look at, we're going to still look for this to continue to keep pushing more higher. So if I'm going to pull out some, you know, moving averages, yeah, some momentum is losing, price is losing some momentum, okay, but still going to be a bullish opportunity, okay. So if it fall and test these areas, I'm going to put some rectangles over there, right, and I'm going to change the buy color, all right. So these are the places you are looking price to hold, okay. First, this flat formation, all right, the flat formation which I have already shown you, all right. This is what currently we are expecting price to do, all right. So hold that and continue to keep rising, all right. So in case if it goes bigger, the one more leg is appearing over there and testing this previous low, all right. So we're still gonna stay bullish on it, all right. So not looking to sell the euro dollar or more downside. Hope that makes sense, guys. So this is what you are looking. So you're simply looking breakout and continue. So this story gonna be all over, all right. So the dollar CAD, all right. So dollar CAD is slightly different, okay, than the other dollar pairs, all right. So we are staying, you know, bullish on the dollar CAD, slightly different, guys. So the reason for staying slightly different, looking for dollar to rise against the CAD is the simple oil, okay. So lower prices on oil gonna keep the trend intact for upside on the dollar against the CAD. And also there is another reason for the dollar to keep rising against the CAD, because we are having, you know, there is a possibility that the significant slowdown is going to happen in next 3 to 9 months, because yields have inverted so deep, all right, and that's causing the dollar to have edge on commodities currencies, okay. So like CAD, specifically the CAD, all right. And if we are going to see sell off on the dollar against the CAD, then this pair is not going to fall, you know, huge to the downside, okay. So still gonna be a buy opportunity. So first of all, I'm gonna look at the weekly chart, okay. So this is where we are heading for the upside, right. So from that weekly low, so we are still looking price to stay trending into that direction, okay. But there is a possibility that it can you know, go into a sideways market like that, right, like this previous you know, like the price has done previously, okay, there. So that's not the bullish trend is not going to be going to change, okay. So like that bigger weekly sideways market can happen over there, this area, right. So that's secondary, but what you are expecting on lower time frame, you are simply looking this structure, okay. You are staying bullish and looking the price to hold the trend and CAD to just keep falling, all right. So dollar is still lagging against the CAD. I mean, dollar strength is still behind against the CAD. CAD is falling significantly, but this pair you're still looking it to continue, okay. So this, let me pull out some rectangle, okay. So this is where you're paying attention. In case if price fall lower than that, yeah, you're still looking, I mean, the buy opportunity, all right. So I'm not anticipating at all a bigger ABC move like that and then again for upside, all right. I'm just simply expecting that the price gonna stay above the moving averages and 4-hour moving averages and gonna hold the trend and gonna continue to keep rising for more upside, all right. So arrows are showing what you are expecting, where you are looking price to hold, that triangle to hold and continue to keep pushing more higher, all right. So if I mean, if we are going to see, I mean, I'm not anticipating, you know, a big change from the Fed side tomorrow, all right. they're simply going to slow down, and they are not going to do anything, funny, which can drive the equity market aggressively lower. If equity market are going to be strongly bearish tomorrow, then dollar gonna rise. And right now there is no reason for the dollar to rise, okay? Because that is clearly telling us that they are cutting slowing down the interest rate hikes, okay? And they're going to wait for the data, how data is going to unfold. All right. So if I'm gonna look at this chart and hopefully you understand the previous analysis, the analysis which I made over there on the Kiwi CAD, okay? 7th of March. So the price can continue to keep rising on pound against the, okay, so we still got a room to run on the pound, okay? So pound can continue to keep rising all the way up to 130, 131 or 132. All right, so this is the target. All right, so we were expecting pound to continue to keep rising, so still got a room to run 132, 130, 131. Okay, 131. This is where the price is suggesting right now. We are looking pound to continue to keep rising all the way. So we got a bottom on pound weekly chart. Hopefully I will be able to find that weekly chart, not that one. Yes, so I have to search that. So what we are expecting pound to just continue to keep rising all the way up to that previous top. All right, so in case, if, as I said, in case if unusual things are going to happen and pound is going to visit, going to visit, I don't see any reason for the pound to visit that 104 or 103 again. All right, but if that is going to happen, then again this is going to be a longer term bullish story. Right now we are not expecting. This is what we are expecting. All right, so we are expecting pound to just continue to keep pushing more higher. Okay, all right, so simply break out and continue its trend for more upside. All right, so arrows are showing just simply break out. We are having rate decision on pound and euro as well, but first we're gonna have rate decision on the dollar. All right, and I don't think so dollar gonna we're gonna have big movement during the Fed rate decision on the dollar, right? But after that, so what we are expecting, just simply breakout. All right, breakout and continue. All right, continue and go all the way up to 130, 131. All right, so if we don't see that breakout again, the trend is coming over there, hold these previous lows, all right, 4R, and then again continue to keep rising. All right, so when you're buying on these areas or looking to get into the market on at these levels, all right, so you have to manage your trades really well. You have to get in and need to look at the market to continue to keep rising very, very aggressively. So if it continues to keep rising aggressively, you're staying in. If not, then you have to get out. All right, you can't get in and hold the trade over there and waiting for the price to continue to keep pushing more higher. Okay, you have to time your entry really well so that you can manage the correction in case if it gets bigger or fall back, or you're looking to buy at the top. All right, you're looking to buy at the top, on this 4-hour time frame, and you have to really time your entry really well and need to stay in as long as price keep rising, keep moving. All right, you're not buying at the top, bottom, or you are trying to get into the market. The trend is already on its way. All right, so continue to keep pushing more higher. All right, so Australian dollar, also looking Australian dollar to, right now I'm expecting dollar to get weaker, simply, all right? And the charts which I'm showing you based on that, all right? And in case if something else happens, all right, or Fed is going to do something else, then we may see, you know, strength on the dollar, right? Right now I'm not anticipating that strength. If that happens, okay, then we may see a stronger sell-off in the equities. Equities are actually setting up for a bearish leg, right? But I'm expecting equities to test the top before going to continue to roll off for the downside, all right? Because we haven't seen you know, the higher rates affect into the equities market yet, okay? And that can drive the dollar some strength on the dollar, right? So I'm not expecting that. So what we are expecting on the Australian dollar, just simply, again, 7th March target, and the 7th March target slightly higher. So there you go. So we may see more strength on it, okay? And it can continue to keep rising all the way up to 73. And you are looking for bullish trend to stay intact and breakout. All right, so you're looking for, let's just follow the moving averages, and just simply looking for price to stay above the trend, okay, and price to continue. So there you're paying attention, and looking that trend to intact and continue to keep rising. In case if we see some, you know, strength on dollar, all right, and again I started to hold these areas, okay, so it's still looking for the bullish trend, okay, so bullish trend to continue to keep pushing more higher, all right? So that's the moving averages to hold and continue to keep rising. All right, and same goes with the New Zealand dollar is, you know, more aggressive, we can say that, all right? So actually right now market is trying to attempt for a soft landing, all right? So market is just trying to attempt for a soft landing, all right? Market is expecting that everything gonna be fine, and the Fed gonna control that inflation, and we will have you know, perfect soft landing, and that's the reason market is just trying to attempt for the soft landing, all right? So New Zealand dollar can continue to keep pushing more higher, right? So we're expecting it to pass that top first, all right, and then in case continue to keep pushing all the way up to 7th March high. Okay, so what to expect? Just trend to stay intact and continue to keep pushing more higher. The trend is slowing down, we can say that the bullish trend is slightly slowing down, and looking for this to again breakout, okay, breakout and continue to keep pushing more higher. These charts are not best charts, guys, all right? So the charts, the dollar charts are not best chart right now, because the moves are already happening. They're moving. But for getting into the market, either you have to go against them, either you have to buy the dollar from the current price, or if you are looking to sell the dollar from the current price, okay, you have to be really good, all right? So for selling the dollar needs to go against the dollar. Fundamentals are not making any sense for us right now to buy the dollar, okay? But to stay with the trend and trend to continue to keep pushing more higher, all right? So you are only looking for a continuation trades on the dollar pairs, all right? And there is the chart where you are looking for a trade, all right? There where you are looking to sell the dollar, all right? Okay, so if I'm gonna look at the dollar yen chart. Okay, so finally, after having a strong bullish trend or devaluation from the Bank of Japan, all right? So Bank of Japan went for a devaluation, and we have seen a significant aggressive move on the dollar against the yen from 114 to Let's just try to find some charts over there on the dollar yen. All right, so problem is that the trading view has stopped. The pinning, there is the chart. Okay, so there we got the chart at that time. So even I did not expect that kind of strength on the dollar against the yen. All right, because we were not, aware that the Bank of Japan gonna go for devaluation of their currency or not. So they adopted devaluation policy, went for yield curve control. When other countries were going for higher inflation, Bank of Japan, they got a perfect opportunity to devalue their currency and push their inflation higher, and that caused the dollar to rise so aggressively for upside against the yen. All right, so we did not expect that kind of strength, to be honest. All right, so we were expecting it to just go and visit these previous highs. All right, so 120, or in best case scenario 125, that kind of top. All right, and it just gone crazy, we can say that. All right, and never look back. All right, so we need to understand that what has caused the dollar to go that much far away against the yen, and what can cause the dollar to fall against the yen. All right, so we need to understand that too. So finally, what happened over there, we got some intervention from the Bank of Japan. We got intervention at this area, right? So if I'm gonna at this date, all right, so those who are watching me on YouTube, they can see my drawings, right? But those who are on TradingView, they're not gonna see my drawing, guys. So we have seen intervention over there from the Bank of Japan. All right, they were selling the dollars. Right, and then again we have seen intervention from Bank of Japan and 152, and since having these two intervention from Bank of Japan, we are having reversal. Right, so we have seen intervention from Bank of England as well. All right, we have seen intervention from the Bank of Japan, and many other. We have seen intervention from the People Bank of China. All right, so these banks were trying to contain the dollar strength. Right, because their currencies were being ripped off by dollar strength. All right, and then we have seen a breakout and continuation to the downside. Okay, so we got a top over there 147, and price started to fall, and it's currently setting up for that kind of, we may see that kind of move. Okay, there is a good chance that the dollar can continue to keep falling all the way up to $100. All right, or it can visit that previous low 70-75 area. Okay, maybe it's not making sense for some that how dollar can fall that much far away against the yen. All right, there is a perfect logic behind that, guys. It can fall. It can fall and it can go that much far away. All right, so if I'm gonna look at the lower time frame and gonna talk about what to expect after or during the Fed rate decision, and then gonna talk about the fundamentals, what can cause that to go that much far away. Right, so we're gonna talk about that later on. So simply you are looking for a breakout. Okay, so this to breakout, and if I'm gonna pull out my moving averages, right, and you are simply looking for this to break out during the CPI data. Okay, if CPI data is coming, you are looking this to break out, this correction to break out. Okay, so sharp breakout has that previous low 133, and the target you are looking is to go up to 128. All right, so 128 right now. First 133, this previous low, test that previous 133, and if we see really aggressive sell off, then continue to keep up to 128, and in best case scenario continue to keep falling up to 125 or 120. All right. So the price target which I'm expecting right now, dollar yen to hit is the 128. All right. And there is a good chance that the price can fall up to 125 before the year end. All right. That's what we are looking. Okay. So you are looking simply breakout opportunity, breakout and continue. Price is just simply ready to break out, set for the breakout. So there you are looking for dollar to break out and continue to keep falling. Now let's talk about that. What can drive that lower, and what can drive the dollar, higher against the yen, right? Let's just talk about first what can drive the dollar lower against the yen. So the first chart we need to look at this, the yield curves, right? The yield curve chart is really important to understand the weaknesses or strength in the dollar. Okay, so we got, this is the short end, 3-month and 10-year yield curve. All right, this has inverted significantly. Okay, so it has inverted back in, according to this, data is not enough on this chart, all right? So it's not showing what has happened in 1974 and 1980, all right? So we got 2000, we got 2007, and just a recent one, we got, 19, August 19, right? So 2019, and then this is the recent one, okay? So recent one has just simply gone below these two inversions, all right? And testing almost, we can say that the 2001. All right, so what this chart is telling us, guys, this chart is telling us that the 3-month rates are higher than the 10-year rates. All right, so if I'm gonna look at that, all right, there we can see. So this is the 10-year yield. Okay, so 10-year yield is sitting at 360 or 358, right? And 3-month is sitting at 427. Why 3-month is sitting at 427 and why 10-year is at 360 or 350, close to 360, all right? So the reason is that market is expecting that Fed gonna raise the interest rate, all right, and gonna raise the interest rate up to 450, all right, 450, or maybe can go up to 5%. That's the reason short end bonds are being sold, right, and which is causing the yields to continue to keep rising or staying, close to the Fed fund rates. But the longer end is still pushing lower. Okay, market is expecting that in longer term rates gonna get down. Okay, and the short end yields gonna fall. Now, when we're gonna look at this 3 months, all right, 3 to 10-year yield, all right. So the lower it goes, it tells us that the Fed is over tightening to kill the inflation. All right, they are trying to kill the inflation by over tightening. All right, and the lower it goes means that growth is being killed by the Fed tightening cycle. All right, so or growth is slowing down. All right, or economy is slowing down significantly. All right, and yen is the best currency to buy when growth is slowing down. Okay, so if I'm gonna look at the let's just look at the dollar yen. All right. Okay, so if I'm gonna look at the 2000, so in 2000, we have seen a huge sell-off. So we have seen intervention as well at that time. All right, and then in 2007 and 8, we got a huge sell-off over there on the dollar against the yen. All right, and then again in August 19, all right? So we have seen again a sell-off over there, and that sell-off. So what can drive that sell-off? Okay, so the sell-off which I'm talking about, that this sell-off all the way back to this previous low. Again, for right now, what Fed is doing, right? So they are trying to fight with the inflation, okay, and which is causing the right. So they are. Let me bring the yield curve back. Right, so normally the yield curve is being watched is this one, okay? So 10-year 2/10. All right. So but for example, I'm using this, all right? So what gonna cause? So right now they are fighting with the inflation, okay? They are trying to kill the inflation. They are not going after the growth right now. Growth is not their main goal right now, all right? Growth is not their main goal right now. They are not looking at the growth right now, all right? Growth, growth was significantly over there, which caused the inflation to go to above 9%. Right now, they are looking at the inflation, trying to bring down the inflation, and growth is secondary. Okay, but what gonna cause the dollar to fall against the yen? Once they're gonna start looking at the growth, okay, once they're gonna start talking about that, oh, we have done too much, all right, we have done too much and growth is significantly slowing down. Let's just cut the rates back, all right, and let's try to bring the growth back, right? That's gonna cause the dollar to fall against the yen, and that can drive the dollar even lower than 100 against the yen, right? That can drive. So we are not there yet. We are far away from that. Fed is not looking to that right now. All right, they are not talking about the growth right now. Growth is not their goal right now. The inflation is their goal right now. Okay, they are trying to kill the inflation, and these yield curves, they are telling us that they are over tightening, and because of this over tightening, they're gonna kill the growth. All right, and once they're gonna kill the growth, they will have to reverse their policy, and once they're gonna reverse their policy, they will have to do a lot of things, all right, to bring the growth back. Okay, that can cause the dollar to fall for a longer term. Okay, so we can see a huge bearish trend on the dollar, which we have seen previously, in 2000, okay, when dot-com bubble burst, and then 2007, yeah, and then then again we just recently we have seen in March 2020, okay, but in March 2020, people were expecting we're going to have a cyclical sell-off on the dollar, but we haven't seen that cyclical sell-off on the dollar, right? So some, were expecting that we're going to have a cyclical sell-off on the dollar, okay? And that going to drive the dollar all the way back to that lower. So we haven't seen that, right? But market is setting up for a cyclical sell-off on the dollar. We can say that we are 1 or 2 years away from that, right? We are 1 or 2 years away from that cyclical sell-off on the dollar, but that is going to come, and that's going to drive the dollar yen to continue to keep falling lower, right now. And there is another thing which can keep the trend intact on the dollar against the yen for the downside, and that is the Bank of Japan. Okay, right now what they are doing, they are having the yield curve. All right, they are buying bonds whenever the yield is jumping. The 10-year yield is jumping about 25%. Right, so this is okay. So they are having yield curve control. So whenever this yield goes above the 25, all right, the 25 is the yield curve band, all right, or range, we can say that. Okay, so whenever it goes higher, Bank of Japan comes and start buying the bonds and pushing the yields lower. All right, they cannot do that forever. They cannot do that forever. Okay, so what's happening right now? If I'm gonna look at the inflation, Japan inflation, all right. So there is the, so Japan inflation is also picking up. Let's just make it visible. Okay, so there we can see that the Japan inflation also started to pick up, and right now it's testing the 1990 or yes, it's testing 1990. We can say that, all right. And if it breaks above, a 4, that can put some pressure on the Bank of Japan to change their policy, to change their yield curve control. Okay, so if right now they're saying that they're not going to change that, all right? They want more inflation. They want inflation to continue to keep rising. But what's happening around the world, all right? So we around the world, central banks are fighting with the inflation. They are bringing down the inflation, okay, which is causing the commodities to go down. All right, when commodities going to go down, automatically we're going to see that the inflation is not going to sustain in the Japan as well, okay, and inflation going to start falling. All right, inflation going to start falling in the Japan as well. So either the inflation going to start falling in the Japan, or it will force the Bank of Japan to change their yield curve control policy, okay. And once they're going to change, let's say if they're going to change, all right, which is less likely, okay, which is less likely till cruda is there till April, and there is no possibility that he gonna change that yield curve control. But in case if they are going to, inflation is going to force them to change, okay, then the gap which we are having between these two assets, all right, so inflation is sitting at 370, and they are having the yield curve control and holding the 10-year yield at 25, okay, and holding the rates in negative territory, all right, so negative 10. So huge difference, we can say that, okay. If they're gonna abandon the yield curve control, we may see strength on the Japanese bond, all right. So that yield can rise very, very aggressively and can go after the inflation, and then market can force the Bank of Japan to raise the interest rate, all right. So this is the very ideal scenario, okay. So I'm talking about the ideal scenario. If that is going to happen, then this is going to be a super bullish story for the yen, right? Super bullish story for the yen. So if even this is not going to happen, okay, Bank of Japan is not going to change the yield curve control and still holding the rates in negative territory, then the inflation is already topping out around the world, and commodities are going down, okay, then we can see the inflation going to start falling. Inflation not going to hold. That's what Bank of Japan is saying that right now. They're saying that inflation not going to hold, all right. So this is temporary inflation, okay. But when Bank of Japan says that, it makes sense. But when Fed says that, it doesn't make sense, right? When Fed says that the inflation is transitory, it doesn't make sense. But when Bank of Japan says that the inflation is transitory, it makes sense, because they are fighting with inflation. They want inflation, but inflation is not coming in the Japan, all right? So we may see drop in inflation. So if inflation started to fall, this is also going to be a bullish story. So there is a lot of bullish stories fundamentally setting up over there for the yen, okay, and which can drive the yen aggressively higher in coming coming year, okay. There is other fundamental reason, okay. The yield curve which I have just shown you, 3-month over 10, okay, that yield curve can only get steeper in one case, okay, if Fed start to cut the rates, all right, and go after the growth, all right. So this chart has its limits, all right? So it cannot keep falling, all right? It has to get back like it has done there, okay? It has to get back. So once it will get back, so short-term rates will fall, right? So short-term rates will start falling very, very aggressively. Short-term rates will start pricing in for rate cuts. That's my point at the start of the weekly market, this meeting, all right? So at the start of this meeting, what I said, all right? I said that the charts we have just shown you, all right? The charts, inflation and 1974 and 1980 comparison, the charts we have just shown you, all right? So short and, in 1974, what happened? Inflation was rising and holding highs, but market started to price in rate cuts, and Fed, went for rate cuts, which caused inflation to stay high or even stay higher for longer. Okay, so short end yields have to fall, and when we're gonna see short-term rates are going to fall, this is also going to be a bullish story for the yen. Okay, because yen moves with the yields. If yields are falling, we see strength on the yen. Is a safe haven currency, all right? And when yields are rising, we see weaknesses on the yen, because it's a deflationary currency, we can say that. So play as a safe haven currency as well. Okay, and there is also one more aspect, and that is that after having a strong aggressive rate hikes from the Fed, all right, so earnings can fall next year. If earnings are going to fall, individual stocks are already falling. Netflix, Amazon, Google, many tech companies are struggling. Meta, Facebook, struggling, yeah. So their shares are plunging. So earnings are also going to fall next, and we are going to see that shock as well in the market, and that can drive the equities lower. Okay, we haven't seen drop in the equities yet. We have seen correction. People still believe that Fed gonna pivot, and they are just buying based on that pivot, all right, or slower interest rate hikes, which is causing the equities to go higher. But we haven't seen a 4.50 basis or 5% hike effect on the stock market or on the equities yet, right? And that can drive the equities lower. So that's why I'm saying to you guys, right now, market or Fed is not looking at the growth right now. They are trying to kill the inflation. Okay, when they're gonna divert their attention towards growth, okay, we're gonna have a different kind of equity market or index market at that time. So we haven't seen that drop yet on the equities. Okay, so this is another aspect that we are going to see a stronger longer term sell-off on the dollar against the yen for the downside. Okay, many aspects. So what we should do on the dollar against the yen, so you are simply looking that trend to stay intact and break out and continue to keep falling, all right? And yes, that's what you are looking. Okay, your target gonna be that, and in case if we are going to see more corrections, you are simply looking dollar yen to stay below 4-hour moving averages for longer term, all right? For medium term, not a longer term, medium term, okay? And every time when you see that it's pulling back, you're looking it to continue to keep falling. And I'm anticipating that the dollar against the yen going to end somewhere close to 125 or 128. Okay, so two weeks left, and we may see stronger sell-off within the next 2-3 weeks. All right, and euro yen, I don't think so I need to talk about that a lot. All right, so if I'm gonna make a comparison on it, right, just for you to understand that, the CAD, all right, so the CAD, as said, the CAD is a commodity currency, and if I'm gonna, let's just pull out the oil chart first, all right, and I'm gonna pull out a CAD chart. Okay, there we can see the trend started on both charts from April 2020. Okay, so we are having strength on all the on oil, and then we have seen, you know, weaknesses. As I have said already, guys, the when oil was going higher, we were having weaknesses on the yen because oil was creating inflation, and inflation was going higher, and the yields were following the inflation, and or simply safe havens, you know, bonds were being sold at that time, all right, which was causing the yen to go lower, and also yield curve control. So what's happening right now? So the inflationary effect is fading. Okay, oil going lower, about to test this previous low, and CAD yen is also following. All right. So if I'm gonna pull out side by side these two charts, I'm gonna look at the CAD yen and gonna look at the oil. Okay, so we can see, let's start from there. So we can see, okay, that's the top. So we can see this is the starting point, all right? And that's the top. So you can see a very much similar, you know, structure was building over there at that top on oil, okay, at this area. So very much similar price action, price behavior. Okay, and oil started to drag lower and retraced up to 50%. We can say that, all right? So trace up to 50%, and CAD has just started to follow the oil, okay, and dropped from that top, and the 50% comes over there, all right, and the longer term we are expecting CAD yen to continue to keep falling all the way up to 75 areas. Okay, it has just started to follow the oil, all right, and I'm expecting oil to visit the 60, all right, and once oil gonna visit the 60, then CAD yen can continue. CAD yen gonna continue to keep dragging lower, all right. CAD yen gonna continue to keep dragging lower all the way up to 86. So why I'm expecting CAD yen to continue to keep falling all the way up to this previous low, all right. So let's just pull out another chart, and let's talk about the logic why it can go up to that far away. So this is the CAD chief, all right, and CAD chief is right now is testing this low, right? So the low is just there, or 23 March low is being tested. 23 March 2020, all right, is being tested by the CAD chief. You know why CAD had back, all right, these gains. So hopefully, guys, there is nothing wrong on the YouTube. You see, yes, it says that reconnect connection. So CAD chief has given all its gain, all right, and testing that low, but CAD hasn't given all its gains against the yen, all right. So we are still away. Almost, we can say that the 88% retracement has happened, all right, or the rally which we were having over there since March 2020 has given all its gain. Okay, but the CAD is still holding gain against the yen. Okay, we haven't seen that drop. So why CAD is not falling against the yen, but CAD has fallen against the chief? Okay, because of the policy. Okay, the Swiss National Bank has changed their ultra loose monetary policy because they were facing higher inflation, and they started to raise the interest rate. They went out from the negative interest rate policy and started to raise the interest rate. Okay, all right, and that caused the chief to get strong too, and we are having that leg lower. Okay, but we are not having that leg lower here. Again, what this is telling us that policy divergence. Okay, the Japan and the Swiss National Bank both were having almost similar policy. Okay, ultra loose monetary policy, negative interest rates, but one bank has changed their policy, and that's causing the the currency to get strong. Okay, that's causing the policy divergence. Okay, and divergence in the price as well. All right, divergence in the price. The CAD is still holding the top against the yen, but CAD chief has already went lower. So what we can expect from the Bank of Japan, how long they can hold that, ultra loose monetary policy. At some point they have to give up, right? And they have to give up. Once they're gonna give up, all right, this is where the price is gonna go, right? This is where the price is gonna go. Okay, and the divergence which we are having right now between the CAD chief or the CAD yen or the divergence which we are having right now, between the dollar and the yen, that divergence gonna end. Okay, all right, and that's what we have seen in past. Every time, this is not the first time. Okay, this is not the first time that divergence is being created by the central bank's policy. Okay, we have seen that, since bubble burst in Japan, Japan is struggling to push their inflation higher. They are having that same pattern. They are fighting with the inflation, and every time when we see higher inflation in the rest of the world and inflation goes higher in the Japan, okay, Japan try to create more inflation, take that event as an opportunity. All right, and while the inflation goes higher in the world, Japan goes for ultra loose monetary policy to push the inflation more higher. So this is not the first time it's happening. Okay, we have seen that many times in the past. Okay, but this creates perfect opportunity for longer term. All right, now we can see that this once that policy divergence is going to be over, we are close to that. All right, we are close to that because inflation is topping out and started to fall. So if Japan is not going to change their policy, then obviously rest of the world is going for the deflation. Okay, which is going to cause that leg lower. Hopefully that makes sense, guys, what we are expecting from the yen to do for the period of time, right? Longer term. Now let's get back to the euro. All right, so just trying to tell you that why we are staying bullish on the yen, why we're expecting yen to gain for longer term. Okay, because there is a policy divergence. The policy divergence you see there, all right, these two banks, and that will drive the euro yen lower too for longer term. Okay, now let's get back to the lower time frame. So the opportunity is already there. Okay, so opportunity in the previous video analysis, I was talking about the breakout opportunity. Okay, so if I'm gonna look at the yen chart, the euro yen chart, okay, so this is what we are expecting, go down for a big time. Okay, it started but still slow, and the recent update, we were expecting this to fall and test that previous low for short term, right? And it went lower and tested this previous floor and went up, all right? And this, yeah, so let's look at, this is what we were expecting recently. Okay, price to hold that and continue, but right now we can see that the price slightly gone above 145. All right, 145 slightly broken out, but this opportunity is still there. Okay, this opportunity is still there. This might be a last attempt for the euro yen to correct. Okay, and we may not see price back back above 145. All right, there is possibility that the price not gonna visit that 145 anytime soon in the future. Okay, so and there is a good chance that the price gonna break down and never gonna look back. Why I'm saying that? Okay, let's just talk logically. Why I'm saying that? Why we can price cannot test that anytime soon. Okay, so let's look at the oil first, and then we're going to talk about the CAD yen, and then going to come back to the euro to okay, so is it possible for the oil to to go back and test that 129 again? I don't think so. I don't see that the oil gonna rise again back to 129. All right, and there is a logic behind that. All right, because rates are higher, market right now is looking for a recession. All right, looking for a slower growth. In next 2 quarters, market is expecting that we're gonna have significant slower growth. Okay, and higher rates are killing the demand. Okay, which is causing actually that is causing the oil to go lower. And what OPEC is doing, they are cutting the supply, all right, and trying to push the oil prices higher. But they are still, you know, OPEC is failing to do that. All right, they are struggling to push the oil prices higher. Why? Because central banks are coming behind the inflation, and they are killing the demand. Right, and that's causing the commodities to go lower, even having, supply shortages in the oil market. Okay, but prices still falling. All right, so it is very less likely that the oil is going to test the 130 or 135 mark again. Yes, let's we cannot say that with 100% surety, because right now world geopolitics situation is not too good. All right, so we are having war between the Russia and Ukraine. That can spread, all right, that can spread out from that region, and we don't know, right? That can cause cause another spike on oil. Okay, but right now we are not having that kind of scenario. Okay, so based on that, I don't see that the oil gonna go up to 130 or 120 again anytime soon. So there is no reason for oil to go back, and there is no reason for the CAD to gain again and test that top 110. Right, 110. So reason why euro still staying close to the top, why CAD yen is dropping, that's creating the lag. All right, so we call that lag. So oil dropping, creating some room for the euro to go higher. Euro CAD is pushing very, very aggressively higher. Okay, and CAD is dropping. CAD dropping against the yen. All right, euro going against higher against the CAD. All right, that's causing the euro to stay at the top and remain in a a kind of flag. All right, so CAD yen is not going to test the top anytime soon. 110. Oh, we don't see 110 anytime soon on the CAD yen. And this is the euro yen is struggling at the top, right? Trying to find its top. So this might be a last attempt for the euro against the yen. Okay, and we may see a quick breakout. Okay, so what you are looking, we may not see aggressive sell-off on the euro yen today during the CPI data, all right, and may not see stronger sell-off on the euro yen tomorrow during the Fed rate decision, but you're looking at it to drop very, very aggressively, specifically after the ECB rate decision. Okay, so right now it's not making sense. I was showing buy on the euro dollar, but at the same time I'm showing sell on the euro yen. Okay, so actually the move gonna be driven by the dollar. Okay, so once we're gonna see that the dollar is going to fall, all right, that gonna push the euro higher against the dollar, and dollar yen lower. Right, once dollar yen gonna drop, then you're gonna see that there's gonna be a slight divergence between the euro yen and the dollar yen. Okay, so that's gonna put pressure on the euro to continue to keep falling very, very aggressively lower and follow the dollar yen. All right, so you're looking at to break out and continue to keep dragging lower. So your target gonna be this. All right, so this previous low, and we may see a 4-hour correction over there at this previous low. Okay, there at this low, and continuation to the downside. All right, so you're watching this chart. This chart is still close to the top and looking at it to continue to keep pushing more lower. Okay, so I'm gonna go quickly now, guys. I'm taking too much time. Hopefully you understand now. All right, the logic or the base case which I have already made. All right, so we are looking this to drop to, all right, all the way back to that previous low. And after the Bank of England rate decision, you're simply looking for this to break down, all right, this flat formation to break down, and that is the trade. Okay, this is the trade, and a 4-hour time frame correction, and continue to keep falling aggressively lower. Okay, for lower, okay, so 150, 155, those areas. All right, and Aussie yen also gonna be a similar, chart. So if I'm gonna go back to the Aussie yen quickly and look at this chart. All right, so on lower time frame prices already, this is what we are expecting, and it's nicely following the copper, right? So falling from these tops within that channel. All right, and right now what price is doing, so all these short-term moves were appearing over there. So what price is doing right now, so it's pulling back. All right, this pullback is just happening over there, right? This pullback is just happening over there. So trade setups are already showing showing over there what you are expecting, what to do next. Okay, so this move is just happening over there, so paying attention over there under that moving averages. Okay, so another leg is just happening over there, and you are paying attention at that top. All right, so if I'm going to remove that and going to remove that too, and you're going to look for this triangle. Okay, or let's just pull out those moving averages. So this might be a last attempt. Okay, and the next leg can break down aggressively. Okay, this previous low, and up to which level we are expecting this to go. All right, again, where the oil is sitting right now are the commodities. Okay, let's just pull out a copper chart with it. Okay, Australian dollar is a commodity currency, and since we had that bullish trend, right, so copper has retraced more than 61% of this bullish trend. All right, and Aussie yen has to follow up that, okay, and retrace up to that 60%, this previous low. Okay, so what it is doing right now, very much similar the way we have seen, similar structure on the copper. All right, so in copper was inflationary commodity, okay, and similar thing has happened over there on the Aussie yen. All right, so this is the move you are looking for, a quick, sharp, aggressive sell-off. Okay, that kind of move you are expecting. All right, so this move you are looking over here on this move, aggressive sell-off. Okay, and once that gonna start, it can be quick. All right, it can be really quick like that, very, very aggressive. So we have already seen start of that quick move on the CAD yen. All right, so CAD yen is already, let's look at these two clean charts. All right, so we're gonna see there. All right, so that quick sell-off seems already have begun over there. All right, there we can see. All right, so and today and after that rate the CN, you're looking CAD to break out and continue to keep dragging lower, and similar kind of sell-off you are looking on the CAD yen. Right, this, let me pull out. All right, so first leg is just appearing over there. First leg is just appearing over there. Okay, so next leg you are looking at quick sell-off. Right, so we may get this correction over there. Okay, that daily or weekly correction over there. So right now, not expecting, but there is possibility for that correction. Why is that? Why is that? Why price is lagging? All right, why CAD yen is lagging while the commodities are falling? Again, policy lag. All right, policy lag. So divergence between the policies, between the central banks, that's causing prices to stay behind. All right, and where we were on the Uzi yen. Let's get back to the 4-hour time frame, and this is where you are paying attention. Okay, so price to stay below 4-hour moving averages, and the trade is very much clear over there. Okay, so there is possibility that the price not gonna visit that high, guys, and gonna break down. Okay, maybe price not gonna visit that high, but up to that high it can visit. Okay, up to this high. So you're looking at breakout and this trade. Okay, so your target gonna be, let me pull out some risk over ratios. Okay, so this is where you're paying attention, right? And that trade, if price is not going to visit that, then breakout. Okay, so sharp breakout behind that, and looking for this trade and possible longer term drop. All right, up to 84 or 80. That's going to be the longer term target. And this is also going to be a very much similar. Okay, so this is a simple chart. The trade you are looking right now is this. It is at the top and trying to push more higher. So short term trade going to be that. And this also might be a last attempt on the Kiwi yen to test that high. And we may not test that high, you know, again for a couple of years like oil. All right, so you look in this trade all the way back to that previous low, or the longer term target going to be much lower. And that's the target, longer term target. So once that trade gonna start to appear, it can be really quick. All right, so that's so this pair can fall, you know, slowly. All right, so we may not see very aggressive sell off. And in terms of pips, you know, 1200 pips, all right. But when we look at the euro yen, okay, so euro yen got a potential to run more. All right, so if I'm gonna, yeah, this is the first target which we are looking right now. Okay, and it has to go there. Okay, it has to test the 134 at some point. All right, so 1200 pips going to be over there, right? And 2100 pips going to be there at 124, where the oil is right now. Oil right now is about to tag the 60, all right? And that's the place where your yen needs to be once oil going to be at 60, all right? And in longer run up to 114. Okay, it can visit 114. So more pips going to be over there on euro yen as with compared to the others. Yeah, so Kiwi yen is also going to be similar like that. All right, so 1200, and in longer run where the catch if is sitting right now 2400 pips. All right, so a lot of pips going to be over there on these charts. So CAD yen is already started, and simply you're looking for a breakout. All right, so lower time frame. So if I'm going to go to the 4-hour time frame, you're simply looking for next leg lower. That's it. All right, and this next leg price is just trying to hold that. So you look in this leg lower, you know, in next couple of days. All right, so your short-term trade gonna be there. So price has already, you know, given us a couple of short-term opportunities over there. So this is what we were expecting, all right? And price slightly went higher and went into that sideways market over there. All right, and finally we got the top over there on the CAD yen within that wedge, and then started to fall. The trending move started to appear over there. So remember, these moves have to appear over there on other yen pairs. Okay, so the move which is just happening over there on the CAD yen, these corrections or sharp sell-offs. All right, and this is the move which we are looking right now. Okay, so 89 go there, and these short-term moves happening over there, right? And yeah, this right, this is happening right now. So Okay, so price is just tested that, gone back up. Okay, now looking for this move. Right, so you're looking for that move. If I'm gonna look at the 1 hour time frame, so you're looking for this to break down and this move to that low and possible continuation to the downside. That's CAD yen. In case if it's slightly pushed more higher, all right. So let's say if inflation numbers are going to surprise us, not going to drop, okay, and it's still pushed more higher, so still gonna be a bearish move. Chief yen also looking this to break down. All right, this breakout and continue to keep falling. And ZAR is already giving you the trade. Okay, the trade which I'm showing you right now, guys, is already happening. Okay, on the emerging market currencies. Okay, so the breakout is already happening over there. The trade which I'm showing you on the yen pairs. All right, so let's just talk about the euro yen and let's just explain that. All right, so the trade is already happening over there. So major currencies they are not moving right now. The reason is that they are waiting for the central banks and that's causing the price to not move. Right, so we have seen sell-off on Rand. Again, we have seen that sell-off. Okay, so you have seen that sell-off there. Okay, so you have seen that sell-off there. Again, price went for a correction. Okay, so this is already going down. So this is what you are looking on the euro yen. Okay, they are not falling. The reason is that the some data is going to release. Okay, the CPI number is going to be released and the Fed rate decision is there. So the move is already happening over there on the emerging market currencies. Right, so yen is already gaining, or rand is falling. So similar move you are looking on the yen pairs. Hope that makes sense. Make a sense for you. All right, so I'm gonna look at the CAD yen, euro CAD. Okay, so these charts were testing multi-years lows and they are reversing after testing the multi-years lows. All right, and okay, so we are just simply reversing after testing the lows. All right, so the price is just pushing higher. So what you can expect, just continuation on the euro CAD. Okay, so euro CAD to continue. So during the ECB rate decision, you are expecting it to break out and continue. So there is a correction due. A bigger correction can happen over there. Right, so make sure you don't get trapped over there once that started. Right, so as long as these tiny corrections keep breaking, you look in them to just continue to keep. Let's look at the 4-hour time frame. All right, so just look in these corrections to hold and continue to keep rising. Not a best chart right now, all right? So EuroCAD, because it has already made its move and pushing more higher and can continue. So EuroCAD chief is also not a best chart. It has made its move, all right? So again, I'm gonna look at the whole chart. All right, so it's making its weekly move and going down, moving all those gains. So yes, there are going to be a buy opportunity at some point. We are not there yet. It still can continue to keep dragging lower. So I would suggest you to not chase that. Just ignore that. All right, so a pound chief is just pushing more higher, and there is possibility that the price can break out and continue to keep pushing more higher. So there was a short-term opportunity on it, all right, and price is just simply going into that way. All right, so pushing higher, and these corrections were forming opportunities over there, and the recent one was that. Okay, so we are just having that one more leg higher, right, on a 4-hour time frame. And yes, so it's just gone. All right, and you shouldn't do anything over there. So yeah, so in case if it corrects and falls slowly over there, okay, and test that previous low, then you can expect it to a short-term buy opportunity over there like that. Okay, and break out and continue to keep pushing more higher. All right, so up to which level pound chief can push? Okay, so it got a potential to continue as long as your pound dollar chart is pushing more higher. Okay, so this also got a room to run. Right, so 7th March high is very much far away from current price. All right, so it comes there, there. So yes, there is a potential that the price can continue to keep rising all the way back to that high, guys. All right, so wouldn't suggest you to buy at the current price for longer term. Just trade for short term on lower time frame, the way I have just shown you. Price to hold the moving averages and stay intact for upside. Okay, one more leg lower is possible, the way my chart is showing. Okay, another leg lower is possible. So euro pound, yeah, so not a best chart right now. Okay, but we may see a reversal over there at some point. Let's get back to the euro pound. Okay, so we are having that leg lower is just appearing over there and trying to sit over there, so still can drag lower. All right, so price is struggling and still can continue to keep dragging lower. Not a best chart, guys, but once we're gonna see that the price gonna tag the lows, we may see this lag. All right, so I would suggest you to just simply stay away from this chart. The move is just gone. Yes, so this is the yes, again, not ready. Okay, but soon this chart gonna be ready to start looking for buy opportunities. All right, so let's just go back to the past chart. All right, so this is the past chart. So it's entering again into the the buy zone. All right, so the buy zone is close to the 103 102 areas for longer term. All right, so every time and it enters into that, it reversed. Okay, so when price was at the high, I was asking you to look for it to reverse. Unfortunately, price slightly went higher. Okay, we were expecting it to fall within when we were having that wedge. Okay, so we were expecting it to hold that high and then fall. Okay, we have seen that one more push and then price started to fall aggressively lower. So what you should do, I would suggest you to just stay away from this chart right now. It's not a best chart right now. Okay, you are simply looking the trend to continue to keep falling, or as a short term back to this low. And in case if it price, yes, there is the place where you start looking for it to hold and buy opportunities. 103, okay, 103, 1029. All right, and in case if it is going to visit one again, yes, obviously that's going to be a longer term buy opportunity. But 103, 1029, all right, so 1025, this is the best price to start looking for buy on this chart. Okay, so on lower time frame, I'm still expecting it to, it's trying to find its floor. Okay, struggling to push more lower, but still got a room to run. Okay, not at a best place to start looking for. Not tradable, I can say that. Okay, you can't sell it at 200 pip move with having a sideways volatility risk. All right, so let this to just fall and test that low. Sell opportunity was there when it was testing the weekly highs. All right, so again, this chart is pushing more higher, and there is a possibility for another leg lower. Okay, we don't have that confirmation right now that the next bearish leg is going to happen, guys. Okay, but again, if fundamentals are not going to change. Okay, so what is going to change? Fed can pour cold water on the rally which we are having over there, on the in the seas. Okay, if Fed is going to do something and not going to like that rally, right? Remember, the financial conditions eased, which caused that rally to come, right? And the Fed has done that, right? They eased the financial conditions, which caused the equities to go higher. Okay, so if they are going to tighten the financial conditions, that can drive the equities lower. So we are not there yet, but in case if they are going to do that, okay, so we may see another leg lower on all these risk on currencies. Okay, so our structure is very much simple like this. Okay, so this is what we can see. Another leg lower can happen, and that's the structure. So what should we do? Should we trade into this move? I don't think so. You should chase that leg lower. Should you prepare for this move? Yes, keep eyes on this chart, and in case we are going to see a stronger sell-off, then another leg lower is going to happen. We're going to see sell-off on the risk on currencies, and equity is going to go lower then, okay, and strength on the dollar, and this will break down and correct and continue to keep dragging lower. So we don't have a confirmation or clear sign for that move yet. Okay, so we are just simply going higher on this. There was a buy opportunity at the lows on this chart. Okay, let me show you that quickly. That has gone simply, right? So when it was setting up for a breakout, okay, so we got some good move, and that wave is still pushing more higher. Yeah, this is still going higher, and yes, this is still going here. All right, the recent chart. So now this daily chart you are watching, okay, this daily chart. So if I'm gonna look at the lower time frame, and if we are going to see a breakout, all right, so I'm not anticipating, all right, I'm not anticipating this breakout gonna come correct and gonna continue to keep dragging lower. But in case if that's going to happen, this move gonna be all over in the market, okay, not just on this chart. Yeah, so we can see, some pairs can lead us that which way risk on assets are going. So if risk on assets are going to fall, then obviously you're going to see that lag. So right now it's a bullish story, and short term one more up lag. That's it on 1 hour time frame, and be ready for a change. All right, so another lag higher. Same goes with the Kiwi CAD. Okay, so I was expecting another leg lower on the Kiwi CAD, and I have posted that chart too, all right? So I was expecting, breakout, and we did not see that, and price there, okay, there at this area, another leg lower. Okay, but price just simply went aggressively higher, all right? And this is yes, they're going to be a leg lower soon on the Kiwi CAD, but right now just simply one more bullish leg, okay, on lower time frame, and the continuation for another short-term buy opportunity. All right, as long as price hold the trend. And the analysis is very much similar like the Uzi CAD. Okay, once we're gonna see a breakout, then this is also gonna go lower. I'll try my best to post that chart. All right, so Euro Chief, slow moving chart, guys, and you're simply looking for this to reverse for longer term. All right, if it has that low, this flat formation, then continue to keep rising. Go up to 110, very much similar like the euro dollar. All right, stay above the moving average and continue the bullish trend and keep rising. So euro as we may see another leg lower. All right, so when you are looking for the next leg lower after the ECB rate decision, okay, after ECB rate decision, so another leg lower and then a buy opportunity from there. So if I'm gonna go back to the euro CAD chart, okay, hopefully you have seen that daily chart. All right, so this daily chart, so price was setting up for a breakout. All right, and on lower time frame, we were expecting for short term one more leg lower, and from bottom it to hold that previous low, go back up. Okay, and it held that low, tested that top. All right, and now it's struggling over there at that top. All right, and setting up for another short term one more leg lower opportunity. All right, this is struggling over there, so price action time. So you are watching, it to go lower, specifically during the after the ECB rate, the CM. All right, so leg is yes. So longer term, we are expecting it to break out and continue to go more higher. So when you are seller, then keep in your mind that the longer term trend is still bullish. Okay, and will remain bullish till we hit the lower growth zone. All right, so and breakout opportunity on the euro New Zealand dollar on lower time frame. Every time when price is testing the previous low or forming new low, you're looking at to hold these previous low or new low. Okay, and looking for this daily correction to break out. And every time when price is coming back within the moving averages, okay, so you can see over there the price is staying within that bearish trend. Okay, and every time and coming within the moving averages, struggling to break out. Okay, struggling to break out. When it comes to there, okay, when this flag breakout comes to there, watch it. If it breaks out and you are holding, and if it doesn't, all right, then one more leg lower. So one thing to understand here, guys, all right, let's just talk about that. So you are looking to buy on the euro against the New Zealand dollar, but looking to sell, all right, euro against the Australian dollar. All right, so let's just talk about that. Why is that? All right, so if I'm gonna pull out the euro and they're gonna pull out euro New Zealand dollar, okay, so there we can see, so that's because of the strength on New Zealand dollar. Okay, so euro was falling against the New Zealand dollar, but euro was staying sideways against the Australian dollar. Okay, what was happening? Australian dollar was falling, okay, and New Zealand dollar was gaining, which was causing that divergence. Okay, so you see that we don't have that divergence normally. Okay, it moves, accordingly. I mean, moves in the same direction. Both pairs, euro Oz, euro Kiwi, they move in the same direction very often. Okay, why selling the euro against the why selling the euro against the Australian dollar, and why buying the euro against the New Zealand dollar? Okay, because this divergence will not stay there. Okay, this divergence is not going to stay in there. This divergence gonna end, and we're gonna see, either you're gonna see that the euro gonna start falling aggressively, Australian dollar gonna gain quickly, okay, and if so, then we're gonna see drop. Okay, we're gonna see drop on the euro against the Oz. Okay, and euro Australian dollar gonna go lower, and the divergence which is there, that gonna be over, right? So if that doesn't happen and New Zealand dollar started to fall, euro Australian dollar doesn't gain, okay, but New Zealand dollar started to fall, then we're gonna see aggressive move over there on the euro against the New Zealand dollar. Okay, so this divergence is not gonna stay there. So you're watching short on the euro against the Australian dollar, looking the Australian dollar to gain and looking to Kiwi to get weaker, right? So that's why, so you're watching, okay, we have seen that divergence many times before. Okay, so normally we have seen that the Australian dollar went after the euro New Zealand dollar, all right? And this, we have seen that because of that divergence, Australian dollar, New Zealand dollar goes lower. Okay, the move which I have just shown you on the Australian dollar, New Zealand dollar, okay, from the top, all right, that caused by New Zealand dollar strength, all right, and this divergence is not going to stay there. So you're watching the price action at the top on the euro against the pause and looking this to go lower, and every time when you're having new lows on the euro against the New Zealand dollar, you're looking to buy over there. All right, make sure you are taking one trade at a one time. Okay, don't take both trade at one time. All right, otherwise one trade gonna be stopped out and the second one can go into your way. So looking to catch the wave, okay, the big move. Right, big move gonna be over there. Either we're gonna have that on the euro New Zealand dollar, or either you're gonna have that big move on the euro Australian dollar. Right, this move or that move. So this still gonna be enough. Okay, so if ECB is going to cause that aggressive move, right, then you are looking this to break out during the ECB rate, the scene and go and continue to keep rising. So same analysis on pound Australian dollar. All right, so it's sitting at the top and pound New Zealand dollar is sitting at the bottom. Okay, so looking it to drop for one more move. Okay, pound to rise against New Zealand dollar and continue to keep rising. Pound CAD is just rising very, very aggressively, all right? And I wouldn't suggest you to do anything on this chart, all right? So the trend is still intact for more upside, and price still can continue to keep rising on 1 hour time frame. I wouldn't suggest you to do anything. Okay, so Uzi Chief to drag lower. All right, so Uzi Chief to, this is the, not at the best place, okay? But in case if it is going to test the moving averages, you're looking it to hold on daily time frame and continue to keep dragging lower. A trending move to the downside like we have seen on the CAD Chief. Yeah, Kiwi Chief also breakout, okay? So similar chart like the New Zealand dollar and CAD. Once we're going to see that the breakout is going to come, okay, then breakout, continue and keep dragging lower. All right, otherwise hold. Don't chase that, all right? So this is a longer term buy opportunity, guys. All right, so every time it comes to there, you're looking it to continue to keep rising. Dollar rand is just simply gone to the next. Dollar rand is actually telling us that the shock which I'm talking about, all right, that is going to happen. Okay, so it's just going higher, about to test that March. Many assets are testing, all right, many pairs, many assets are testing the March 2020 lows and highs. This is one of them. This is CAD Chief testing the March 2020 lows, all right, and this is also testing, all right. So euro dollar has tested, dollar index DXY has tested. So many charts are testing that. So they are pointing out that the days are not good ahead. All right, so you are going to see us, roller coaster moves at the start of the January, right? January is going to give you us roller coaster moves. Okay, so dollar rand to continue to keep rising. Okay, so equities, indices. Okay, so I'm quickly gonna look at the past, and then gonna talk about the short-term opportunities. Okay, and then we'll try to end this market outlook. Okay, so what I need to look for, the Nasdaq 100 index. So you need to understand that. Okay, this is very important, guys. Need to understand that it's changing. All right, so regime change, the word is being used is the regime change. Okay, so there, and this is what's happening right now at the current price. Okay, so what we have seen back in 2000 in dot-com bubble bust. Okay, according to this chart, dot-com bubble bust, right? And what happened with the tech stock went into a big bearish wave, all right? So started to fall from 4,800 and went up to 800. So big bearish wave. Okay, but what we have seen on Dow Jones, okay, Dow Jones went up to you know, 11,000 or 12,000, we can say that went up to 7,000. All right, we haven't seen that kind of wave over there, okay, on the Dow, the way we have seen on the Nasdaq 100 index. Okay, so Nasdaq 100 index dropped 83%, okay, while the Dow dropped for 38%. All right, so every time when prices were going down on equities, okay, so people were selling the tech stock, right, and buying the industrial average, Dow industrial average. Okay, so it was going higher and this was going lower, right? So the reason is very much simple, that guys, the right now the higher rates are causing the tech to keep falling, right? And Dow is pushing more higher. Okay, so if I'm gonna look at this daily time frame, all right, so then we're gonna get the idea. Then you're gonna understand what's happening on the current price. Okay, so there we can see. So if I'm gonna look at this move, all right, so these moves, the Dow was correcting and rising. All right, so Nasdaq index 100 index was also pushing higher. Okay, Dow was falling and then again recovering really well, but Nasdaq 100 index tech stock wasn't recovering. Okay, all right, so was staying trending. All these corrections were keep breaking. All these corrections were keep breaking. Right, so again, this might be a, you know, time for, you know, bubble to burst. All right, so we don't know what when market gonna unfold. We will see that, right? So it's repeating the same behavior again. Okay, so this might be a correction for more downside on Nasdaq 100 index. All right, so US 30 pushing more higher, but Nasdaq 100 index is struggling to push more higher. All right, Nasdaq 100 index is struggling to push more higher. So where is the top? There is the top. There is the top. All right, so Dow has recovered similarly the way it has recovered back in 2000. All right, almost 21%. Okay, but Nasdaq 100 index hasn't recovered yet. All right, and still staying at 29% lows. All right, and dropped up 38%. So still lagging. So Nasdaq 100 index is still lagging. So tech stock is struggling to the higher rates. Okay, so what you are simply looking for right now, so potential opportunity is there. Okay, potential opportunity is there. So we may see Nasdaq index can retest that top, can reclaim that top, but there is also a risk very much similar like the risk which I have just shown you, you know, back in 2000. Okay, you know, Nasdaq 100 index may not continue. Okay, and can continue to keep dragging lower. We may see more downside. So when you are looking to buy the Nasdaq 100 index, just keep in your mind that rates are high. Okay, Fed fund rate is very much high, and at the same time, you know, tech stock is struggling, right? So struggling simply to high rates. Tech stock is not leading anymore. Okay, so we may see more downside. So for short term, you're still staying bullish on the Nasdaq 100 index, all right, and staying obviously bullish on the Dow, right? So staying bullish, even if Dow is going to form a double bottom, all right. So the way I'm showing, so still going to be buy opportunities. We're not going to see drop like we have seen on Nasdaq 100 index in 2000. You're not going to see drop like that. So that's the reason you are simply looking for a buy opportunity. Okay, so we have a buy opportunity over there, and price is just simply holding that and looking that to continue. So this to just reclaim the top and continue to go higher. So, you know, we do have that chart in our, you know, room. I have shared that chart. all right? But I have shared that those similar charts on the trading view as well on the Nasdaq 100, because I haven't posted the Dow, but have posted the Nasdaq 100 index, all right? And that's okay. So there is the Nest chart. The Nest is still staying over there, holding that daily correction. Okay, but short-term opportunities were being created over there on the Nasdaq 100 index. All right, these short-term opportunities at the previous low. So what you are looking, simply you are looking, you know, hopefully that was the recent one. Yes, price is holding that short-term previous low and going to continue. So you look in this, it's just gone, it's held that floor, and you look in it to continue and possible breakout, aggressive breakout after the Fed rate decision and continue to keep pushing more higher. Okay, so Fed is going to not going to show concerns on this rally. Okay, then continue. But again, guys, keep in your mind the 2000 bubble. All right, so 2000 bubble price action, we still may see another leg lower. Okay, this leg lower is still possible. Okay, so the structure is gonna stay there for a while. We are not going to see change in this wedge. This wedge is going to stay with us for a while. Okay, this is what you are looking for longer term, but keeping in your mind that one more leg is still possible. Okay, and again, once we're gonna have that new leg lower, we may see another short to medium and buying from the lows. Okay, and for longer term and short term as well. The same goes with the S&P 500. All right, so I don't think so I need to talk about that a lot. All right, similar opportunity was there for short term on the S&P 500. All right, and SPX 500. SPX 500 is also bounced off for a short term from those lows. All right, and holding the short term areas there. Okay, so short term trade is already on its way. So if I'm gonna go to the 4-hour time frame, and so you're looking this to continue. If it comes back to that low again, you're looking it to hold that. All right, and you can see that on a clearly on this 8-hour time frame, price is struggling struggling to go below that 8-hour time frame, right? So daily time frame chart, don't forget that chart. Yeah, so there are many other assets, all right, but we are running out of time, so we'll do that, again. So on oil, you are oil to just simply go to 60, right? There is a possibility for that one more leg lower, okay, but you are trying to avoid buying oil, all right? So it can visit that 60 before going to continue to go higher. All right, so we are still looking it to just continue to keep dragging lower oil. All right, and copper is the chart you are watching. Financial conditions are slightly eased, that caused the copper to go higher. Okay, but this is the move. All right, that's the moves. Copper definitely gonna go lower. Okay, having inverted yield curves, copper doesn't make sense to rise. All right, so Bitcoin analysis is gonna be over there on the YouTube. I have already made the analysis. All right, and if you have a time, just go and look at that. It's gonna be on my channel. All right, so that's the currency, that's the indices. All right, so I take a lot of time to explain to you guys why we are buying, why we are selling. So make sure you understand that when you are buying or selling, the reason behind that. Okay, so Microsoft also continue to keep rising, similar analysis like the indices. Okay, and the same goes with the AMD. Okay, AMD to hold that previous low and go higher. Nvidia also pushing higher. All right, and trying to continue rise. Google too. All right, so Google slightly went lower to this previous low. Okay, so still looking Google to bounce back after the ECB rate, Fed rate decision. We may see this move. Okay, the move which already appearing on other indices. Okay, so this to go there, that move. So Amazon also find that floor and bounce back. Meta, very much similar. Tesla also, go and give us that wave. right? So these are tech stocks. They are simply struggling because of the higher rates, all right? And you are looking them to go higher. Okay, so thank you very much. We will have another, weekly market outlook analysis. So that's what you are looking. So inflation to go down, all right, and inflationary assets to go down, all right, and bonds, all right. So bonds are very important right now. Bonds are simply a buy. So right now you are looking 10-year to keep gaining, all right. So 10-year yields to continue to keep falling. So we may see significant drop on the 10-year yield. Okay, so 10-year yield can drag all the way back to that previous low. Okay, so 250 is on card on the 10-year yield, right? And 2-year yield also gonna fall. Okay, but time is not there yet for the 2-year yields. Okay, so 2-year bonds also gonna be very hard to buy, right? But right now, because of Fed, they are struggling, so we may see a significant sell-off on them too. Okay, remember, we're not going to have steeper yield curve till short and bond yields fall. All right, this is not going to get steeper. So it has to go higher when short and bonds going to start falling, when 2 years bonds going to start falling. And inverted yield curve is telling us that we are going to see maybe in the first quarter of 2023 or in second quarter of 2023. Okay, so 6 to 9 months, right? So the lag time is the 6 to 9 month, and within that 6 to 9 months, we may see shock in the market of that inverted yield curves. Okay, guys. So thank you very much. Again, if anyone want to join us, just simply go and look at that Wave Dash Trader, and if looking to get the information, just fill that and send that form to me. All right, and we'll try my best to get back to you as soon as possible. Thank you, and have a good day. And I'll try my best to update to you guys. You can follow me on TradingView, Telegram, or on Facebook for updates. If I'll see that the opportunity is coming, the charts which I'm watching right now is the yen pairs, okay? Because that yen pairs are going to offer the longer term opportunities. Yen pairs haven't reversed yet. And the rest of the market, we can see that they have reversed. Oil reversed, dropping from top, copper, commodities, other commodities, even dollar, all right? Euro dollar reversed from 95. So many other currencies, they have reversed. So what is not reversed? Yen is not reversed. And bonds, all right? So yen and bonds, we may see opportunities for longer term on yen and bonds, all right? Yields can drop. So thank you. We'll see you back again in another analysis, weekly market outlook. Until then, bye.